Hiya, welcome back to My Compound Life. I am Jonathan. Great to see you. Thanks for watching my video. Do the like, hit the like, hit the subscribe. Help me out as a small content creator. I think I'll continue to post more of such content, especially when I'm kind of driving, when there aren't a lot to do. So in today's video, I'm going to talk a little bit about Bitcoin. I think this will essentially be kind of like the norm, where I'll just drive in my short little distance. I would talk about Bitcoin and so forth. So it is the 4th of November. Bitcoin price now is 104,600. I think it dipped about an hour ago, to about $103,600, right? So that's in dollars. I think the sentiment is still pretty negative. So have the expectation that it might drop further tonight to even sub $100,000 by this week. So that's the current situation. If you find yourself constantly checking on the price action, like myself, that essentially means we're too overly invested on this asset, right? So of course it does affect my sentiment, but having said that, I started My Compound Life essentially to talk about personal investment for novices, amateurs like myself. Of course, my investments are very diverse, from real estates to stocks and shares, Bitcoin, and crypto, ETFs, and so forth, right? So having a diverse baskets, I think, really helped me not to stay mentally strong, because obviously some of the equity market are definitely performing, like Apple, definitely performing. Tesla, God, I'm happy I've got Tesla. So I think it's more than 2x now for Tesla. But having said that, please make sure you don't sometimes be too overly invested in an asset class that you can't, pull yourself away, right? So the mental management of yourself is equally as important too as managing your assets. I've came across some interesting stats. I'll put this stat onto the video shortly. So for the past 365 days, for the past 1 year return, I think the best return was Tesla at 93%, followed by Google 66%, followed by iBit, that's the Bitcoin ETF, I believe, at 60%, and followed by BTC at 57%. Nvidia, it's also strong at 52%, gold at 46%, Amazon at 31%, and QQQ at 30%. So kind of goes on, right? So I think to a certain extent, Bitcoin remains still one of the strongest performing asset, right? And that's something definitely to look forward to in the many years to come. But at the same time, I want to emphasize a little bit about treating Bitcoin as kind of like a bank, right? Because I think in the previous video, I obviously spoke about Bitcoin as a new way of banking, Bitcoin as a new ways of storing your value, right? Because more of the traditional bank, how much interest do they actually pay us? I think if you now go into a UK bank, your personal account probably yields you around 0.5%, 1% interest per annum, right? Of course, you can put it into fixed deposit, right? Maybe you might be able to get away 3.5%, 4%, right? Or some of the more sophisticated user, you might put that into your ISA, right? I think ISA nowadays gives you about 3.8%, less than 4%, right? So if you want to treat Bitcoin as bank, a little bit like what I'm doing right now, right? You need to take into a few things into consideration. So consideration number one, right? It is still a volatile asset, right? So take for instance, Bitcoin currently at 103,000 US dollars, right? In the past week, I think last week, on the same similar timing, it was around 116,000, right? So one might argue, damn, I bought Bitcoin at 116,000 and now it's 103,000. Where the hell is the store of value, right? So if you want to treat Bitcoin as a bank, right, it might as well be your S&P 500 asset, right? There will be time where it will be highly performing, and there will be instances where it will underperform tremendously, right? So as long as you save the money and invest away into Bitcoin and have the mental preparation that you might not get your return in a short period of time, 3 months, 6 months, right? And you're fine, right? Because investing, I think at the end of the day, is always about your timing, right? Some might catch the right timing and then you would have huge gain, and some might not, right? So that's why I'm kind of always emphasizing that when you put money setting aside into Bitcoin, if you're someone not really disciplined, but you have conviction enough to say that I've got £10,000 right now or £5,000 right now, I want to put that into Bitcoin. Yes, you can start to pound cost average in with a fixed set of money. Maybe do so, chop out your £10,000 into a matter of 10 weeks and start putting in, £1,000 a week, right? If you're someone more disciplined like myself, like what I'm going through now, yes, I wouldn't say I'm overly invested because I'm quite diversified in terms of my investing. However, my goal now is to exit a portion of my Bitcoin, right? As opposed to buy the dip, right? All of the influencers right now are calling everyone to buy the dip. I think that's pretty silly, right? So the best thing is, the best entry, I think, will be the next dip, the coming dip. And I kind of foresee that if it still follows the 4-year cycle, which a lot of OG investors, a lot of whales investors are following, essentially that will be sometime in November next year, right? So I'm in the process of stacking up cash to make sure that I catch that entry, right? I know that when I catch that entry at that time, I wouldn't be able to lump sum in because I will never be able to catch the low, right? So that's why in that period of time, what I'm going to do pound cost average with my huge lump sum and buy and do so buying every on a daily basis, right? So a little bit like how I'm exiting Bitcoin, I'm also exiting a little bit at a time on a daily basis. Whenever there's a whenever there's a kind of like a peak, I'll exit more and so forth, right? The second thing that I think, if you want to treat Bitcoin as a bank, right? And I think many of us or you guys might be saving to even buy your first properties, right? So maybe for the younger audience that are watching it right now, maybe you are trying to save up for a property. Maybe the best thing is not to store that money in Bitcoin, however, to put it into a higher, yield saving account, right? Essentially, because you need that money immediately in 3 months, 6 months, a year time, right? So it makes sense not to store that into Bitcoin. So I still strongly believe that Bitcoin will outperform any of the other asset class in the long run, or even outperform gold. So in that case, always set aside a small portion, or pound cost average, a small portion into Bitcoin also makes sense. Okay. The second thing that I want to talk about when treating Bitcoin as bank, coming back to this conversation, is once you started to buy Bitcoin, right? Store them away in a cold wallet, right? So if you do not know what cold wallet is, do a little bit of research, watch a little bit of video, and start to store away your Bitcoin in cold wallet, or sometimes we call them hardware wallet, right? Once you stack up a small amount of Bitcoin, put them into cold wallet, hardware wallet, put them into a bank deposit box if you've got one. I think it's very important. Don't even store them at home. Store them at your mom-in-law or father-in-law or whatever, right? I think it's a good thing, an important thing, because number one, it stops you from wanting to do something with the Bitcoin collaterals, right? Because during time when the market is good, you might be tempted to think that, oh, it will only go up. I might want to do some leverage trading on Bitcoin, right? Okay, so I think third thing is don't do leverage, right? Okay, so it kind of prevents you, if you put it into a cold wallet, a hardware wallet, for you to easily access to it, start to go crazy on your leverage trading, right? So in my compound life, I don't really talk much about leverage trading because to a certain extent, it's a little bit of a gamble. I've been there, I've done that, I've been burnt, and I wouldn't recommend any of that, because I'm more of a conservative investor now, as opposed to previously, because now I don't really work, and I'm kind of in the retirement stage, where I kind of believe that preserving your capital is more important than trying to grow it, right? So dependent on your different phases of what's happening in your life, right? You might want to leverage different investment vehicle to help you to acquire more asset and so forth, right? And for now, it's something not for me, leverage trading. So make sure you actually store that away into your hardware wallet. And of course, I think have discipline in such a way that, if you know that this asset will outperform anything, right? Like your properties or gold. The properties meaning your real estates, your houses and so forth, right? That means you're gonna have to keep hold of it for many years to come, right? So have a discipline to think about how much of these of Bitcoin asset you want to hold and put it into a cold wallet or hardware wallet, right? Would that be 60%, 50%, 80%? I don't know, right? And if you're a little bit like myself, that I still need a little bit of compounding and then selling off Bitcoin every few years to fund off my retirement, right? So that would be approximately 20% of my stack right now, where that 20%, I am actually prepared to sell at any point of time, like, because it's the ending of the 4-year cycle, the Bitcoin cycle. So that 20% that I've set aside, I'm actually, either ready to sell, or in the process of selling, right? And of course, if Bitcoin do go up to 150K, 200K US dollars, wow, that would be amazing. I think I can, take off and shave off another 5%, 10% from my 80% stack to essentially sell that off too, right? So have that in mind, right? How much do you need to sell, and keep the rest away for your longer term hodl, right? Hold on to dear life, if you haven't heard of the term hodl. I think that's it. If you, treat that as a bank. But certainly, if you treat it as a bank, essentially that means you're going to have to accumulate or get back into reaccumulation, right? And sometime you might want to stack up cash to get back into that reaccumulation phase, but at a later stage, right? So as I've mentioned earlier, like dependent on your savviness, dependent on how disciplined you are, the best time will probably be sometime next year, or which would be about 100 days before the next halving event, right? So the next halving event is very important because usually for the past Bitcoin cycle, approximately 100 days before the halving event, that would be when the Bitcoin price would be at its lowest. So that's when I want to re-enter, right? I want to stack up cash, and not to purchase immediately right now, where the price may still seem a little bit higher. Maybe in the reaccumulation phase, sometime in November, when Bitcoin dips, it might get, back down to sub 100,000 zone, right? So that would be like the time to reaccumulate. So I think, you need to start to think about how do you want to juggle this, and more importantly, back down to sub 100,000 zone, right? So that would be like the time to reaccumulate. Apology, I think my earlier video got cut off because ran out of memory on my little DJI Nano thing. Yes, so I think we been on a long holiday last week. Haven't actually got time to to take off or delete the video from the current memory, or export them into an external memory. So that's fine. I've just gone through it. Anyhow, I think it's towards the end of the video. I spoke about the next accumulation phase, obviously, would be the best time to re-enter. I mean, we just got to stay strong, right? Because ultimately, this is an asset class that will grow in terms of the adoption. As we can see, there's so much more adoption now. And for us to treat it as it's to treat it in such a way like a bank, I think it makes sense too, right? And you probably need to think of it kind of like ETF of your S&P 500. Like in the UK, I would buy Vanguard VUSA. It essentially tracks on the US S&P 500. So yeah, I think continue your stacking journey. and don't get frightened out. And if you're not familiar with buying Bitcoin or storing Bitcoin in a cold hardware wallet, resort into buying Bitcoin ETF or ETP also makes sense. But certainly, I always think you're much better off holding Bitcoin as opposed to holding paper Bitcoin in such a way. I think that's it for what I want to talk about in this video, treating Bitcoin as a bank. But certainly, it isn't exactly like a bank where, your £1 will be the same £1 in a month's time, right? It can go up or down, of course. But if you need money in a short period of time, then maybe, you can't treat that as a bank, right? However, if you do have enough disposable income, and then you do believe that over a longer time frame, this asset class will go up, which personally I think it will, because, and I'm kind of like presenting that from my conviction on Bitcoin. So that's why I'm consistently buying too, right? But of course, I buy them during the bear market as opposed to, to buy them consistently. So this is where, you need to start to consider about pound cost average and so forth, and be a little bit alert of when the bear market is, right? So the bear market, I don't think it's right now. However, the bear market, I think, will probably be sometime next year, right? So my next entry will be November next year, right? So stack cash, but of course, in Compound Life, it isn't just about talking Bitcoin. It is talking about investing in different asset class, right? So real estate, Bitcoin, ETF, equity market, stocks and shares. I think these are all a great asset class that can help us to compound, right? And to get to where we are, or get to an earlier retirement age, like myself, what I'm doing. Okay, so thanks for watching. Again, I'm Jonathan. This is my Compound Life. Hit the like, hit subscribe if you like the content, and I'll see you in the next video. Thank you. Bye.